we had seen in last 2 days US market moving up by almost around 2.5%. That is on Thursday and Friday. And that was mainly, we had seen in the last week, the market has seen, US market has seen a good bounce back. That is post event of the Fed hike, which was expected, and also some positive news coming from US and from Russia and Ukraine that the war can end. The negotiation between Russia and Ukraine is still continuing, and we are not seeing any result up till now. But the negotiations are on, and expectation is that the positive result can come. Today morning, US markets are more of marginally down, and Asian markets are seeing some mixed reactions. A few of the markets are showing some negative trend, like Australia, New Zealand, and South Korea, whereas Hong Kong and China are showing positive trend. Japanese markets are closed today. And in the commodity also, nothing so great activity. Only thing is that oil has bounced back very sharply post on Friday and even today also, and almost reached to over $110. So that is mainly on account of indication that Russia short supply may not be met by the may not be having impact, or maybe having impact on the demand from the overall oil market, and has taken the oil again up over $110. Apart from that, the other commodity like metal, aluminum is up by around 2% in today's morning trade. And apart from that, copper is up by around 0.5%. Iron ore is flat, and steel is also up by around 0.5%. So some positive trend emerging in commodities. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, looking towards the Asian market, we believe that our market is likely to open with a gap up, and we're likely to witness a positive move during the day. Friday, we have seen that the Nifty has maintained a on Thursday, it has seen that the Nifty has maintained a positive closing about the 50 days moving average, which was about 17,280 levels, which gives a relief sign on the technical front. Looking towards the technical chart, I believe that the Nifty will extend this pullback rally towards 17,400 level. That will be the immediate resistance level. If it surpassed that level, then 17,470, 17,500 levels can be seen on the higher sides. Whereas on low side, 17,270 will act as the immediate support level because it's provided by the 50 days moving average. As long as Nifty sustains above this 50 DMA, this pullback rally likely is to be extended on the higher sides. So the overall view will remain positive, but this pullback rally is likely to be continued. The market will remain a stock specific, so hold your long positions with the strict stop losses. Coming towards the Bank Nifty, as of now, Bank Nifty is struggling to surpass its 50, 100 PM moving averages. So for the today intraday purpose, it's likely to test the 50 DMA, which comes to at around 37,180 level. So that will be act as a immediate resistance level. So if we are getting any pullback rally, the rally likely to be extended towards 37,000 psychological level. If it's break that level, then 37,200 and 37,400 levels can be seen. Whereas on downside, 36,200 will be the first support level. Any move below that level, 35,800 and 35,700 levels can be seen on the downside. Coming towards the Nifty Finance for today intraday purpose, the resistance is placed at 16,940. Above that level, 17,050 and 17,100 levels can be seen. Whereas on downside, 16,770 is the first support zone. If it's break that level, then 16,670, 16,600 levels can be seen on the lower side. I think that's it from my end. I request derivative guys to take a call forward.
Thank you, Swati. See, on the derivative front, looking at the overall positions, open interest seems to be on the higher side. The overall open interest has risen in the last 2 months. In fact, in this last 15 days, lot of open interest has increased. So definitely, with high open interest, we might see another round of selling coming in. However, with Nifty breaking 17,000 levels on the upside and sustaining above the same, that is a good sign. Now, looking at the open interest for calls and puts, 17,500 call has the highest open interest amongst calls, while 17,000 and 16,500 put have the highest open interest amongst puts. So, more or less, from the positions, it looks like for this week, we might remain range bound in between 17,000 and 17,500, and probably probably next week, if 17,000 is broken, we might see a fresh round of selling coming in. Good sign here is that the VIX has decreased from 31, 32 odd levels to 22 levels. So that is good. So VIX is now coming down, and if it comes down below 20 for the longer term positions, it is a very good sign, because then probably Nifty can witness some sort of aggressive buying. But up till then, with the other data as well, a little higher on the higher side, looks like one fresh round of selling can come in, if not in this week, probably in the next week. So booking profits around the 17,500 level should be a good option going forward. From the stock specific levels, I believe banks have witnessed good amount of short covering action. Now, this short covering action has been majorly seen in banks which had a large amount of shorts. There are banks which still have some shorts, the likes of ICICI Bank, Kotak Bank. So they might witness more short covering action going forward. However, stocks in the IT space, they continue to attract short positions, and that means that you will see further selling in these stocks. So Infosys, TCS, Tech Mahindra, they can be under pressure. So look out for the same. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. On Spandana Spurti Financial Microfinance Company, a couple of people who had left IndusInd, the MD, CEO, as well as the CFO, both have joined Spandana Spurti. And this was being speculated that they had resigned a couple of months back. So probably they would be joining over here, and that has come true. Also, apart from this, company has issued 47 lakh equity shares and around 18.5 lakh convertible warrants to two existing private equity players, Kedara and Valiant, at a price of rupees 459, which is marginally higher than book value of around 418. The total amount via this fundraising is 300 crores. This will result in total outstanding shares expanding by around 10%, and the stake of combined PE players increasing from 13% to 21%. So overall, things are moving in the positive direction. Also, there is news on Cochin Shipyard, which has signed an agreement with Dredging Corporation of India for building the largest dredger of India, in collaboration with IHC, a Holland-based company. The cost of this project will be 950 crores, so positive for Cochin Shipyard. And lastly, Maruti Suzuki has announced that they will be investing 10,400 crores towards the EV side of the business, and out of this, around 3,100 crores will be invested in the making of electric vehicles by 2025, and the remaining 7,300 crores will be invested towards EV battery manufacturing plant. This will be done by 2026. However, there is no change in the timeline which they had earlier said, that They would be launching EV vehicles in 2025, so that remains as it is. So as such, this announcement will not have any impact on the near-term earnings, but from a long-term perspective, we remain positive on the stock. Thank you.
Good morning, everyone. Vocart has entered into a collaboration agreement with Serum Institute of India to deliver a global vaccine from its new facility in UK. So basically, this collaboration is to supply additional 150 million vaccine doses of multiple vaccines each year, and this is a profit sharing arrangement between the two parties. This is a positive news for Vocart. We have seen that Vocart had earlier also signed such contract manufacturing deals on their vaccine program. So this is something they are building on, and this could revive the business. However, from the fundamental point of view, we are not very positive on Vocart and would recommend stocks like Sun and Cipla in the large cap. That's all from me. Thank you.
Yeah, good morning. JSPL's wholly owned subsidiary, Jindal Steel and Power Mauritius, has prepaid a loan of $357 million to its lenders. This prepayment will help the company to clear its entire debt on Jindal Steel and Power Mauritius. With this prepayment, company's overseas debt now sits in its Australian subsidiary of $113 million, which the company plans to repay by September 22. Over a period of time, JSPL's net debt has come down from a peak of 46,500 crores to 11,000 odd crores in December 21. Thank you.
Yeah, apart from that, the Reliance has been successful bidder for Syntex Industries through NCLT process, and but as per the resolution plan, the existing equity share value will get zero, and the shares will be delisted from BSE and NSE. So the existing shareholder will not get anything in this resolution plan. As such, negative for Syntex Industries share prices. That's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.